I remember the first time I opened a crypto chart. Lines going everywhere, green bar, red bar, number one did not understand. People throwing around work like related stress index, MACD, Fibonacci zero retracement, Bollinger Bands. I closed the tab immediately and told myself this was not for me. But here is what I eventually discovered, and what nobody told me when I was starting. You do not need to understand everything on the chart to begin trading. You need to understand five things, just five, and by the end of this video, you will understand all the five clearly. We'll draw an example on the charts in front of you right now. If you have ever opened a crypto chart, felt completely lost and almost giving up, stay with me. The video was made specifically for you. Welcome back to the channel. My name is Latif Sadiq, and this is the channel where we teach crypto trading specifically for Nigerians and Africans who are serious about understanding this market properly. This is video 3 in our complete Nigerian beginner series. In video 1, we cover everything you need to know before you start: what crypto is, why USDT matters, risk management basics, and how charts works conceptually. In video 2, I walk you through creating your Bybit account and buying your fixed USDT using Naira through P2P. If you have not watched those two videos, go back and watch them first. Links are in the description below. The series built on itself, and you will get much more from this video if you have the foundation from the first two. Today we get into charts. Read charts on a real platform with two example. Now let's open TradingView.
This is TradingView for chart analysis. So the best part for Nigerian beginners is that this free account asks everything you need to start. You don't even need any to pay money for anything. Just follow everything I teach you on this channel. So now, if you have not created your TradingView account yet, just go to TradingView.com and sign up for free. It takes less than 2 minutes, no payment details requirement. So once you are logged in, click on charts at the top right of the corner page, then open the main charting button. Actually, this is how TradingView's interface looks like. Let's bring the demonstration today so that you can easily go ask me once. This is how TradingViews look alike at the first, but we are going to break it down piece by piece until it feels completely natural to you. So let me first orient you to what you are looking at. So in the center of your screen, this is the chart price. This is the chart price in the center of your screen. This is the price of Bitcoin in USDT. So of USDT right now. But along the bottom of this chart, this is the time axis. At the bottom, this is the time axis, or what you say is the time axis. So along the right side of the chart price axis, this shows you the price of your Bitcoin, as we said earlier. But at the top of the left side, you can see the name of what you are charting in this. This is BTC USDT.P, which means Bitcoin price in USDT dollar. So on the left screen is a chart. You see a lot of toolbars here. So at the top of the chart, you will see the various time frames. At this page, this is where time frame is coming. This is where time frame is. If you click this thing, we see a lot of time frames from 1 minute, 2 minutes, 3 minutes for till the end. This is where you will see your time frame. So now let us talk about the most important element on this entire chart, which is the candlesticks. All what you are seeing here, let's talk about it. All candlesticks we are seeing here. Now let's discuss about it, how it's going to be, and what is the meaning of all this thing and how it's going to work. Now you see all these color bar you are seeing like this on this chart, they are all called candlesticks. So every single candlestick tell you exactly what happened to the price during a specific period of time, whether that is 1 minute, 1 hour, 1 day, or 1 week, depending on your time frame settings. Because if you set 1 hour here, that means each candle, like as you are saying, it represents 1 hour. This is how they perform within 1 hour. This is how they perform within 1 hour. They all represent 1 hour. So each candle contains 4 pieces of information. But let me zoom it so that I think you guys can see it very well. Now look at this candle here. Look at this green candle here. This one I'm showing you. Look at this green candle here. Let me break it down, parts of it. The body of the candle is the thick rectangular part, as you are seeing here. It's So now the opening price is the bottom of the price. This is where the price started. It started at the 69,170. That is the opening price. Just look at the closing price here. That is 70,580. That means the closing price is the top of the body on a green candle. This is price of Bitcoin. This price of Bitcoin was one when this 1 hour candle finish and this one started. This is the price of the Bitcoin at 69,000 plus. So when it's closed at 70,000 plus. Because the closing price, any candle you see like this tick like this, the closing price is always higher than the opening price because that is bullish. The candle is green, the price went up during this period. So during this period, the price went up. Those that are buying, they have higher volume than those that are selling at the moment. Now, the upper wick shows that the highest price reached during this period. These upper wicks show that the highest price during this period, even though the price ultimately came back down, so came close lower than that, higher. So let's look at the second red candle beside this one. Let's look at this red candle. First thing is that the opening is at the top. This red candle, it started at 70,322. That is the opening of this red candle. While the closing of this red candle closed at 69,318. Have you seen the difference? For green candle, it will open at the bottom, closed at the top. For red candle will open at the top, closed at the bottom. That is the two difference of each candle. This one represents that the market at this moment is going up, while the second one is telling us that the current market at this moment is coming down. Now let's go. But this one doesn't mean that as the market is going up, you can enter long, it will be going long. That is, you don't have any proper understanding about it. That means you don't have any structure, you don't have any ouch. This one too is not telling you that it's coming down, it will just be coming down like that. No, just you have to know the reason why it's coming down, how you can enter the trade with coming down. So now we will talk about the support and resistance that you can use to trade. Just let's go. Now, when I tell you that the green candle price went up, buyer won in that period. But the red candle price come down, seller won that period. But a chart volume of most green candles means buyer have been in control over that period. A chart like this one, that means buyer, they have power, they win the market at this period. But this one is telling us that seller, they enter the market and win the same buyer at this moment. Now let me show you the different time frame and why they matter. Now let's go. At this point of this chart, you can see this time frames option. Right now, we are on the daily time frame. Let me show you the daily time frame right now. Right now, we are on the daily time frame. This is the daily time frame of Bitcoin. This is the daily time frame of Bitcoin at this moment. At the top of the chart, you can see this time frame option here. I think I've told you how you can come along with this one. Right now, we are going to daily charts, meaning all the charts all the candles you are seeing here, this is how they represent single day, day by day, day by day. So just let me show you what happened when we switch time frame. Now, you see the 1 hour time, you see the daily candle, you see how it looks like. Now let's change to 1 hour candle so that you will see what I'm talking about. Now this is the 1 hour candle. This is the 1 hour candle. Now each candle, as we are seeing there, I've already tell you, is represent 1 hour price movement. But you can see many more candle covering the same time period as you see. But because we are looking at hourly price movement rather than daily ones, so just now let's back to the daily chart and let me tell you what we see. Now, if you are looking at the daily time frame, you notice how much cleaner and clearer the overall picture is. Just the major trend becomes obvious, they did not disappear. The things look really compared to compared to 1 hour time frame. So this is why, as a beginner, I strongly recommend starting with a daily chart for your analysis. It gives you the clearest picture of what is actually happening in the markets without getting lost in the noise of the shorter time frame. The second one is that, as a general rule of thumb for Nigerian beginners, the daily chart is for you to understand the big picture trend and major levels. The 4 hour charts, the 4 hour time frame for you is to understand you can see the difference. The 4 hour time frame for you is to find more prices, entry and exit points. Like this place. We will soon go there in a few minutes from now. The 1 hour chart is for timing your entries. Once you have identity a sector on higher time frames, always start your analysis on the daily chart time frame before you did anything. Always start your analysis on the daily chart frame. This is where you can get the good gauge where Bitcoin is going, where coin is going, and where it will stop, and what is your next step. Now, let's talk about the two most important powerful concepts on any chart, which is what I tell you earlier, that which is support and resistance. Firstly, let me tell you one thing: support and resistance are the two most important concepts in all of technical analysis. If you understand nothing else from this video, understand these two things, they alone will improve every trading decision you make. But let me explain both in the simplest position or possible way, and then show you real example on charts right now. Let me bring the horizontal line for you. Oh, sorry. Okay, now this horizontal line. Firstly, this is what we call support level. Let me explain what I mean by this for you. Now, look, support level, this is where buying pressure is constantly strong enough to stop the price from falling further. But let's take a look at this area of this chart. You can see that the price came down roughly. It came down roughly from this place. You see, from almost 90,000, come down to this place. Come down to almost like 64,000 naira, $64,000, and then bounce back up. When it reach here, it banks. Look at this one to 70 something. When it's reached here again, it's bank. Look at this one. You see the top here, you see the top here, you see the bottom, you see the bottom here, you see the bottom here, you see the bottom here. Anytime you confirm 3 bottom like this, or 1 or 2 bottoms, that takes a support level. But let it just be 1, 2 for good confirmation. It is like there is an invisible floor at this price level. So every time the market fails to this area, buyers step in, buying becomes stronger than selling, and the price always bounce back upward. Now, I draw these horizontal lines across this level right now. This is your support line. Why does support form a specific line? Because price already has memory. Traders remember significant price level. When the price returns to a level where buyers previously stepped in strongly, many of these same buyers are new ones step in again, expecting the same bounces. This collective behavior creates the support level, as you are seeing. Now, let's go for the second one. We have the resistance line. Okay, let's stay here first. Let's stay here before going to another place. Now, resistance line is like the opposite. It is a price level where selling pressure is consistently strong enough to stop the price from rising up again and coming down. Now, this one, you just look at this area of the charts that I put the resistance to. The price rose up to roughly this level. If you see, this place to this place, come down, rose up from this 60 something. Look at the price going to 73, 74 upward. That is where we call support. But at this point, when it reaches here, what happened? The price still come down. Getting ready, the price is still on its way going there again. And just look at what will happen when the price reach here. It's either it come down or it will restructure. That's where we say, that is when we are talking about the breakout or fake out. It is just like there is an invisible ceiling at this price level. Every time the market rises to this area, sellers step in, seller becomes stronger than buying, and the price always fell back down. That is it. The power of support and resistance is that these levels work across all time frames, all markets and all coin. Both Bitcoin, Ethereum, Solana, BNB, and all altcoins. Support and resistance exist everywhere because human psychology is consistently everywhere. Just mark down. Now, let's go and let me tell you what happens when the support or resistance break. Now, here is something critical that every Nigerian beginner must understand. What happen when support or resistance breaks? Look at the price on the chart. The price was respecting the now this is what I'm talking about. At this point, this is resistance, this is support level. But just look at this AR chart. This price was respecting this support level most of the times. When it come here, it banks up. You see, when it come here, it banks up. When it come here, it still pass on little. But when it come here, what happened? The price went down. When it come here, what happened? The price went down. This means the level that was previously a floor, where buyer you are stepping in, has now become a ceiling. This thing has now turned to resistance at this point. I think you are getting me, because it's already break the structure coming down. And what happens next? If you want to predict your analysis, you will draw this one at resistance at the bottom. So that is the level of the structure. But when you see this happen on a chart, it tells you something significant has changed in the balance between buyer and seller. The thing always happen to resistance too. Now, the third concept I want to teach you today is trend identification. So this one is understanding whether the market is moving up, whether the market is moving down. So this is the critical, because one of the most powerful rules in trading is trade with trend, not against it. While beginner consistently lose money trying to fight the trend, buying into a clear downtrend because it looks cheap, selling into clear uptrend because it looks expensive. The trend is your friend. That is always the trend is your friend. Now, let's start with what we call the uptrend. Now, let's go. Let's bring the trend line. This is the trend line. Have you seen it? Now, at this point, look at what happened. What happened at this point? You will see one thing. You will see that the market move up massively from this place to this place. That is uptrend line. But one thing I want to tell you today is that as a newbie, whenever you want to see something that is going up like this uptrend line, you only draw the line at the bottom like this. So whenever the market or the candle cross the line like this and come down, that means there is change in the market. You have to change your direction, or you have to leave the market at that moment. Now look at when it crossed this trend line. What happened? The market went down massively, which means you have to be careful of which level are you drawing. Is it downtrend or is it uptrend, and where did you put the line to? Always master this one because of the team set, and then because of some losses. No, now look at this place. The price go from higher high, higher low, higher high, higher low, and higher high. That is where we call the support level. But each pullback stakes above the previous pullback below. As this pattern where each higher is higher than the last higher, and each low is lower than the last lower. This is called higher highs and higher lows. This is the definition of an uptrend. Buyers are consistently in control. Each time the market dips, buyers step in at a higher level than before because confidence is increasing. When you see this pattern, the bias is to look for buying opportunity. Anytime you see this pattern, the bias will use to look for buying opportunity. It's not on the pullback towards support. Now, let's look at this section, which is the opposite, which I call downtrend. Look at what happened from here to here. Let's just drop it here because I don't want this tutorial so long. What happened? You will see the market went down massively from here to here, even break the resistance, break the support level, and come down. Now, what do you see here? You will see there is a rally here. What I told you earlier is that when you are drawing the resistance, make sure it be at the bottom. Now, when you are drawing the uptrend, but now when you are drawing the uptrend, make sure the uptrend is at the top and follow the trend. If you see here, it's about to break, but no, it rejected. That means it's still coming down, and it come down massively, broke the support level and go down. This is called lower highs, lower lows, and this is the downtrend seller are in control. When you see this pattern, do not buy because it looks cheap. A coin that dropped from its high is not necessarily cheap. In a clear downtrend, it might have much more further to fall. Beginners lose a numerous amount of money trying to catch each flying knives like this going into downtrend because the price looks attractive compared to where it was before. Repeat the trend. Now, the third market condition is sideways. Is sideways. You have already know uptrend, you have already know downtrend. Now let's talk about the sideways. Now, we even call it consolidating or ranging. This price is bouncing between a clear support level below and a clear resistance level below. You see, this is resistance level, this is the support level. Look at what is happening here. The price went here, go up, come down, go up, come down, go up, come down. At this point, we can call this side trading. You can call it side of consolidating or ranging because the price is not even break here, it's not break here. And what we are waiting for is either it's touch here, go for long again, it's go here, it's come here, go for short again, it's come here, and make sure you tight your stop loss if you are trading it. Now, during consolidating, experienced trader either wait for a breakout in one direction or trade a range, buying near support and selling near resistance. As I said earlier, the pure resistance, they always wait for breakout. If they don't say the breakout, they have to sell at this point and then have to buy at this point. But for beginner, I recommended simply waiting during clear sideways market. Let the market choose its direction first, then trade the direction. That is just what I will tell you as a beginner in trader. Now, but for the beginners, they always trap because they see it's already break the trend line, it already break the support resistance line. What they did, they go on in instance on long trade with market order, which is very wrong. But as a beginner, you don't even need to obsess over volume, but start noticing it alongside your price analysis. Over time, your eye will develop a natural sense for when volume confirms a question, a price move. Now, let me show you how to bring everything together and actually analyze a chart from scratch. This is the process I go through every time I sit down to look at any chart, whether it is Bitcoin, Ethereum, or any other coin. Just follow along on your own TradingView account as I do. Now, before I look at any details, I want to understand this overall context. Is this market, as we are seeing it, is it uptrend or downtrend or sideways? Looking at this place right now, I can see this is downtrend. As I told you earlier, this is downtrend. It's actually doing downtrend at this point. This tells me the overall bias, whether I should be looking for buying opportunity or whether I should be caution. And at this point, I should be caution myself and then waiting patiently to break out as it is and go on short trade again. Ride the lines. The second one is that I am going to use the horizontal line tool and click here, which is this one. I'm going to use the horizontal line tool and click it here on the left. It's always on the left floor like this place. All these tools, but you are seeing this one, we are calling it the trend line. This one we are calling it FIB retracement. This one is XCB pattern. This one we are calling it long section or short section. This one we are using a brush to mark out something. This one is text. This one is emoji. This one is measurement. This one is to zoom in and so on and so on. This one is magnet mode, and this one is for you to be keep drawing. So that is all about the tools that we are having on TradingView. Now, I'm looking for price level where the market has bounced from the overpriced at multiple times in this past. The most time a level has been tested and held. The stronger and most significant that level is I am drawing this line here at this point. Yeah, I drew this line here at this point. I think you can see the price that is bouncing up from this level almost like 4 times, 1, 2, okay, almost like 3 times at this level. It reacts back. These are many keys. They are now on many charts and we watch them closely as the price approaches them. There's another one I will give you is just identify the current trend. Based on what I see on these charts, BTC USDT on one daily time frame. At this moment, it's forming lower highs, lower low, lower highs, lower low, which is already downtrend. So trading against the trend is one of the most common and most expensive mistake beginners make. If the trend is up, look for buys. If the trend is down like this, look for sell or stay out entirely of the market if you don't understand what is going on in the market at that moment. Now that I have already know the trend and I have my level keys marked, I am looking for a specific situation. But in an uptrend, I want to see the price pull back toward a key support level. That pullback represents an opportunity for me to enter. You see what happened here? This is the pullback for you to enter the long trade again. You see, this is a pullback for you to enter the long thing. This is another pullback for you to enter the long thing. But if you tight your stop loss very well at this moment, you will know that the pullback is already here at this point and you will go on a short trade. So that is it. I'm not trading right now, so I'm just identifying where the interesting areas are. The actual trade decision requires more elements, which we will cover in the next video on trading strategy. But for now, the skill I want to teach you is to practice open trade. If you look at the Bitcoin daily chart and repeat this first step, zoom out, mark level, identify the trend, find the interesting area. Do this every single day, even if you never place a trade during that season. The consistent practice of trending charts daily is what builds the pattern recognition that will make you a better trade over time. Now, let me tell you the common beginner mistake that's always make on the chart. Because before I close the video, I want to address the most 5 common mistake reading on charts in Nigerian beginners trader. Because knowing what not to do is just as valuable as knowing what to do. First, the mistake one is starting on the wrong time frame. Some beginners will just trade from the 1 minute time frame to 5 minutes, from 1 minute time frame to 5 minute time frame. It's feel more exciting, more movement, more action, more candle. But lower time frames are full of noises, random price movement that mean very little starting on a 1 minute chart. It's like trying to understand the plot of a movie by watching 1 second at a time. So always start on the daily chart as we did, build down to lower time frames only after you understand the higher time frames context. Mistake 2 is that draw too many lines. Beginner will draw line here, we still look for another place here, we still look for another place here, we still look for you are confusing yourself at that moment. So I say beginner's chart that looks like a spider web. So lines draw everywhere and as every possible lines. More lines do not mean better analysis. They create confusion and make it impossible to identify which level actually matter to you. Only draw the most obviously at the significant level, the one where the prices as clearly and repeatedly react. 3 times key level on a clean chart is more powerful than 20 lines on a Clutch one. Mistake 3 is that ignoring the trend direction, like I said earlier. Beginners always look at the coin that is dropped significantly and think this is cheap, I should buy. No, price alone means nothing without trend constants. A coin that dropped from $10 to $1 might look cheap, but if it is a clear downtrend with lower highs and lower lows, it could drop to 0.1 or lower sef. Always identify the trend before making any buy or sell decision. Mistake number 4 is changing time frame to see confirm when they want to see. This is called time frame shopping, and at this point, they switch to 15 minutes chart and find a small uptrend. They use that small uptrend to justify it by ignoring the larger downtrend on the daily chart. This is extremely dangerous. The higher time frame always dominates. So mistake 5 is expecting charts to be perfectly predictable. Charts are tool for probability assessment, not crystal balls. A clear support level does not guarantee the price will bounce up. It means historical price has bounced from that area and there is a reasonable probability it may do it again. It's not 100% assurance that if the price is bouncing every time it will be bouncing, it will be bouncing, it will be bouncing. No, look at what's happened here. It's come down and form another resistance here and go down again. Trading is probability game. Even the best chart setup fails sometimes. This is why risk management, which we cover in video 1, is more important than any chart trading skills. But charts tell you that where the good opportunity are, risk management keeps you alive when this opportunity do not work out. Now, before our next video, I want you to do one specific exercise that will accelerate your charting reading ability faster than anything else. Number 1 is open trading view that you are looking at right now. Now look at the Bitcoin daily chart swing. Use these horizontal lines as I used it to draw what you believe are the three most important support level and are the three most important resistance level on the current chart. Then in the comment section of this video, describe in simple word what you see. Is Bitcoin in an uptrend, downtrend, or sideways movements? Where are the keys level you identify? I will personally respond to every comment and give you honest feedback on your analysis. This exercise is more valuable than watching 10 more videos. Actually doing the analysis, even imperfectly, is how chart reading becomes a natural skill rather than just theoretical truth. Now, let's summarize everything we cover in this video. As I always say, we talk about candlesticks, all these things that every candle tell you the opening prices of the market and closing prices, and highest prices and lowest prices of the period. Green means price went up, red means price went down. We talk about time frames. Always start your analysis on the daily chart time frame as you are seeing it, and we talk about the support level where is a price floor where buying is always consistently strong enough to stop the price like this one. That's for me feeling. Look at far level where price bounce up. We talk about the resistance. There is a price ceiling. This is a resistance. This is a price ceiling where consistently strong enough to support the prices from rising. Look for level where prices have already fallen multiple times before you drop your resistance. We talk about the trend identification. We talk about the higher highs and higher lows. Means uptrend. Talk about this one. Means uptrends, and then we talk about the lower highs and the lower low means downtrend. Talk about this one. We talk about the volume. We talk about the first step analysis. And then in the next video, we are going to build on everything from today and introduce your first step complete trading strategy. A simple, clear, repeatable approach that Nigerian beginners can actually apply from day one without years of experience. Do the homework I described. Come back with your Bitcoin chart analysis in this comment section. I'm looking forward to see what you identify. Subscribe so you do not miss the next video. Share this with a Nigerian who need it, and I will see you in the video. Love you. My name is Latif Sodiq. Thanks, you guys.